It is late, and the world outside our windows is moving at a speed that feels entirely unnatural. I used to think that to survive times like these, you had to be faster than everyone else. I thought you needed to catch every trend, trade every headline, and constantly outsmart the crowd. But then I watched the market dismantle people who were far smarter and far faster than me. And I realized that true financial survival, especially when global headlines start sounding like final warnings, belongs to the boring. Let us look closely at what is happening on the global stage right now. Because the math of chaos is always predictable, even if the timing is not. We are seeing reports of structural escalation, of decision-making centers being targeted, and supply infrastructures facing quiet, hidden risks when you look at conflicts, whether it is the deployment of advanced missile systems like the ones hitting tactical junctions or the disruption of energy corridors. The immediate reaction of the crowd is panic or speculation. People run to their brokerage accounts. They try to short the market, they buy volatile defense stocks, or they liquidate everything into cash that is quietly melting under inflation. I made those exact mistakes a few years ago. Thinking I could trade geopolitical friction, it was a complete illusion, an expensive lesson that taught me that trying to profit from chaos is just a sophisticated way of gambling. The reality of our current economic landscape is that volatility is an unavoidable tax on the undisciplined. When energy infrastructure is threatened, like the recent security discovery on gas carriers or the systematic targeting of grids, energy prices do not just fluctuate, they reshape the cost of everything: the bread you buy, the server space you rent, the electricity powering your home. It all ties back to these precise points of friction. If your wealth strategy relies on the world remaining stable and peaceful for the next 10 years, you are playing a game with mathematically terrible odds. But if your strategy treats chaos as a baseline certainty, you stop reacting to the news altogether. Let us look at the numbers, because numbers do not care about political speeches or military strategy. When a major region enters a period of total conflict or prolonged structural defense, capital seeks safety, but it does not seek it in the places most people think. It flows into assets that possess intrinsic, undeniable utility, assets that cannot be wiped out by a single drone strike or a policy change. For me, accumulating that first $100,000 did not happen because I picked a winning stock during a global crisis. It happened because I disciplined myself to look at the world through the lens of defense and mathematical necessity. I stopped looking for 10 times returns and started focusing on removing single points of failure from my life. When you look at the geographic realities of the current front lines where cities are being encircled and logistical routes are being cut by FPV drones, you see a physical manifestation of risk concentrations in finance. Most people do their portfolio mapping exactly like those flawed military lines. They build white zones and yellow zones, pretending they have control. They assume their diversified mutual funds or their tech stocks are safe because a reliable source told them. So then, a systematic market shift occurs, an energy shock or a credit crunch, and they realize their buffer zone was entirely imaginary. The lesson from the ground is that true control is rare, and the only margin of safety that matters is the one you build with deep structural redundancy. That means holding assets that have zero counterparty risk, assets that thrive on patience rather than momentum. We are currently living through a period where the global order is calibrating, and that calibration is going to be incredibly noisy. There will be more final warnings, more technological surprises like fiber optic long-range interventions, and more economic sanctions. Every single one of these events will trigger a wave of emotional narratives designed to make you act, designed to make you trade. The media needs your attention, and the market needs your liquidity to feed the institutional machines. Your only job sitting across from me tonight is to refuse to give it to them. We must embrace the boring truth that wealth is built in the quiet spaces between global panics. It is built by maintaining a high savings rate, buying high-quality cash-flowing assets when everyone else is selling, and letting compound interest do the heavy lifting over thousands of days. It is not glamorous, it does not make for an exciting social media update, and it will never make you rich overnight. But it is the only method that has a mathematical certainty of success over time. As we watch the world navigate this incredibly complex and dangerous chapter, do not let the noise dictate your financial sovereignty. Fix your inputs, protect your capital, and let the chaos play out on the screen while you build your fortress. In reality, let us sit down and look at our actual net worth numbers tonight without any filters. I remember sitting at my desk when I was 22 years old looking at a spreadsheet that showed almost nothing. I had a few $1,000s saved from side jobs, and I felt this intense, heavy anxiety that I was falling behind. Everywhere I looked on social media, people my age were making $50,000 a month trading options or flipping digital assets. I felt like an absolute idiot for working a regular job, tracking every single dollar spent on coffee, and putting away $500 a month into index funds. I felt like a background character in someone else's success story. But that anxiety is exactly the trap that the financial system sets for our generation. It creates a false sense of urgency, making you believe that if you do not get rich by next Tuesday, you have failed. When you act out of urgency, you make decisions based on hope rather than math. And hope is a terrible risk management strategy. Let us think about what happens when you decide to become aggressively boring with your money. When you automate your savings, when you minimize your lifestyle inflation, and when you build a cash buffer that can sustain you for a full year without any income, something shifts inside your brain. You stop checking the daily market charts. You stop caring if the S&P 500 drops 2% or jumps 3% in a single session. You start realizing that a market crash is not a tragedy. It is simply a clearance sale on high-quality assets when the world feels like it is spinning out of control. Having $50,000 in pure liquid cash is a psychological superpower. It allows you to look at a corporate layoff, a geopolitical shock, or a sudden economic downturn, not with terror, but with absolute calm. That calm is what allowed me to cross the $100,000 mark before turning 26. It was not a sudden stroke of luck. It was the cumulative effect of saying no to 1,000 small temptations. It was saying no to the newer car lease, saying no to the overpriced vacation I could not afford, and saying no to the hot stock tip my friend gave me at dinner. Every time you say no to a useless expense, you are saying yes to your future freedom. Let us look at how capital actually behaves during macro crises. When a country faces infrastructure damage, or when shipping lanes are disrupted, global supply chains compress. This compression causes structural inflation, meaning the purchasing power of fiat currency decays faster than traditional economic metrics. Suggest if you are holding your entire net worth in a basic checking account yielding 0.1%. You are quietly losing wealth every single second, but if you rush into speculative assets to beat that inflation, you risk losing 50% of your capital in a single market correction. The middle ground, the sober ground, is to find businesses and assets that possess true pricing power, a company that makes the medical equipment people need, or a utility provider that powers a city or land that produces food. These things hold value because humanity cannot function without them. When you invest in these sectors, you are tying your wealth to human survival rather than human sentiment. Human sentiment changes every hour based on what some news anchor says. Human survival remains constant through every war, every pandemic, and every recession in history. I want us to think about the concept of asymmetric risk. An asymmetric bet is where the downside is limited and known, but the upside is potentially massive or highly probable over time. Most young investors do the exact opposite. They take on symmetric or negative asymmetric risk. They risk $10,000 of hard-earned capital to potentially make $2,000 on a volatile tech stock option. The math behind that behavior is completely broken. If you lose that $10,000, it takes you months of physical labor and emotional stress to earn it back. You have traded real hours of your finite life for a temporary dopamine rush. When you build wealth through the boring method, your downside is completely protected by your emergency fund and your low fixed costs. Your upside is guaranteed by the undeniable law of compounding productivity. Let us talk about what compounding actually feels like, because people love to show charts of exponential lines curving upward beautifully after 30 years. What they do not tell you is that the first 5 to 7 years of compounding feel completely stagnant. You put in $10,000, and at the end of the year, you have $10,700. You think to yourself, I sacrificed so much just to make $700. This is pointless. The urge to quit and buy something shiny becomes almost overwhelming. But if you stick through that dead zone, if you keep adding capital year after year, the math begins to take over. Suddenly, the interest on your interest starts earning more than your monthly contributions. Suddenly, your money is working harder than you are. That is the moment true financial sobriety clicks. And once you experience it, you can never go back to gambling. Let us examine the current energy crisis mentioned in the global reports. The discovery of explosives on industrial gas carriers is not just an isolated security incident. It is a warning shot for global logistics. It proves that the physical infrastructure supporting our digital world is incredibly fragile. We live in an economy that assumes perfection. It assumes planes will always fly on time, ships will always dock safely, and electricity will always flow cheaply. When that perfection breaks down, the businesses that rely on cheap debt and constant growth collapse instantly. The businesses that survive are the ones with clean balance sheets, zero debt, and massive cash reserves. The exact same rule applies to your personal life. If you are leveraged to the hills, if you have a massive car payment, a huge mortgage, and credit card debt, you are relying on perfection. You are assuming your job will always be there, your health will always be perfect, and the economy will always expand. That is not a strategy. That is a dangerous hallucination. Let us spend the next few minutes designing a personal financial fortress that can withstand any geopolitical storm. Step 1 is defining your baseline survival number, the absolute minimum amount of money you need to keep a roof over your head and food on your table. Once you know that number, you multiply it by 12, and that becomes your untouchable cash reserve. You do not invest it, you do not touch it to buy a dip. You let it sit there as a barrier between you and absolute panic. Step 2 is treating your income as your primary wealth-building tool, not the markets. The best investment you can make when inflation is high and wars are escalating is increasing your personal skill set. An elite engineer, a brilliant writer, a master technician, or a superb project manager will always find employment because their skills solve real problems. The market can take away your stock portfolio, but it can never confiscate your competence. Step 3 is acquiring assets with extreme discipline, picking a fixed percentage of your income and investing it systematically. Regardless of what the headlines say, when the news is terrifying, you buy. When the news is euphoric, you buy. By doing this, you remove human emotion from the equation entirely. You let dollar-cost averaging turn market volatility into your greatest ally. I look at my peer group today, and I see so much exhaustion. People are tired of trying to guess which way the world is going. They are tired of the constant cycle of outrage and fear. They are looking for an anchor, something stable that they can rely on when everything else feels like shifting sand. I am telling you that financial discipline is that anchor. It gives you the freedom to log off Twitter, to turn off the television, and to focus on building a beautiful, quiet life with the people you love. Wealth is not about showing off. It is not about buying a luxury watch to impress strangers on the internet. Wealth is the ability to wake up in the morning and realize that nobody owns your time except you. It is the ability to say no to a toxic boss, to take care of your parents when they get sick, and to sleep peacefully through a global banking crisis. Let us stop chasing the illusions that the financial industry sells us. Let us stop looking for the secret formula or the hidden loophole that will make us rich without effort. The formula has been public for hundreds of years: produce more than you consume. Invest the difference in productive assets and have the radical patience to wait. It is a mathematical certainty, a beautiful law of the universe that works every single time it is properly applied. As we close our conversation tonight, I want you to take a deep breath and let go of the pressure to figure everything out by tomorrow morning. The world is going to be chaotic for a very long time, and that is completely outside of our control. What is inside our control is how we manage our next paycheck, how we protect our capital, and how we guard our minds against panic. Let us choose the boring path. Let us choose the quiet path of mathematical reality. Thank you for sitting with me tonight, for listening, and for sharing this space of sanity in a very loud world. Keep your head down, protect your downside, and let the compounding begin. I know that tonight feels heavier than most nights. With the reports of naval confrontations and the shifting of geopolitical alliances, it is easy to get caught up in the drama of global power moves, to feel like every headline is a personal challenge to your future. But remember that your capital is a limited resource, and it should be guarded with the same intensity as a sovereign nation guards its borders. Most people treat their brokerage account like a casino floor, betting on news updates and short-term fluctuations. They are essentially donating their wealth to the institutional players who profit from their restlessness. When I look at the current state of the global energy markets and the fragility of supply lines, I do not see a reason to gamble. I see a reason to tighten my belt and become even more disciplined with my own resource allocation. There is a profound, quiet strength in being the person who does nothing when everyone else is scrambling to sell or buy. It is the strength of a mountain that does not move regardless of the storm surrounding it. That is the kind of character you need to cultivate if you want to reach financial independence. You must become someone who is unmoved by the constant waves of fear and greed. You must be someone who treats your personal financial security as the highest priority. Above all the noise and external distractions, every dollar you save today is a soldier you are deploying to defend your future. And you want those soldiers to be deployed in places where they are working for you 24 hours a day, 7 days a week. They should be working in companies that generate value, in assets that appreciate over time, in businesses that provide essential services to the world. They should not be sitting idle, nor should they be sent into the meat grinder of speculative high-risk trading. I have seen many of my friends lose years of progress because they believe they could beat the market by predicting the next geopolitical event. It is a trap that is designed to catch the ambitious and the intelligent. It uses their intelligence against them, making them feel like they have figured out the pattern when they have actually just fallen for a distraction. Stay away from those traps, focus on your craft, increase your earning power, and reinvest your earnings into productive, high-quality assets. That is the only path that is proven to work for generation after generation. It is the path of the steady, the calm, and the disciplined. It is a lonely path at times because you will not have the immediate validation of quick wins. But the long-term payoff is a freedom that nobody can take away from you. The freedom to live on your own terms, to support the people you care about, and to sleep soundly at night while the world remains chaotic and noisy. Believe in the power of the slow accumulation, in the beauty of a spreadsheet that shows your net worth growing steadily over time. It is the most beautiful thing you will ever look at, a true work of art that represents your hard work, your self-discipline, and your wise decisions. Never lose sight of why you started, and keep moving forward with confidence and clarity. The future is yours to build, and you have all the tools you need right now to succeed. Stay patient, stay focused, and keep compounding your wealth until you achieve the ultimate freedom you are working toward. This is your life, your time, and your money. So take full responsibility for it and make every decision count toward your long-term vision. You are capable of achieving great things, but it requires the maturity to look past the short-term noise and focus on the long-term reality of mathematical certainty. Take this advice to heart, apply it consistently, and watch as your financial fortress grows stronger and more secure with each passing day. Peace.